Can retail funds cope with the administrative burden of tiered pricing? Open-ended funds failed to follow the lead of investment trusts by passing on economies of scale. Tiered pricing is being pushed as a fairer alternative to ad valorem fees for retail investors in light of the Woodford Equity Income wind down, but commentators have quibbled whether there is incentive for active managers to change or if they would be able to cope with the added administrative burden. CFA UK came out strongly in favour of tiered fees in its review of retail fund fees, which it launched in conjunction with the Financial Conduct Authority introduction on the 30th of September of Assessment of Value rules. CFA UK weighed various fee structures against four principles: simplicity, transparency, aligning the interest of investors and managers, and treating all investors fairly. CFA UK professionalism advisor Andy Burton says the concept that the fee will drop as the fund grows in size is still relatively easy for investors to understand and would be simple to show in fund documentation. The alignment of interest is also there, Burton says. With an ad valorem fee, the fund manager gains all the upside of the fund growing, whereas a tiered fee will allow investors to participate in that. And that participation is open to all investors, so it's fair to all, and there's no issues with people buying a fund and exiting a fund, which is one of the complications with some of the performance fee structures we looked at. Asset managers have been able to charge a full fee without question. Both Fidelity and Allianz have rolled out variable performance fees on some of their most popular funds, while M&G Investments announced it would be trying a tiered structure on funds with over £1 billion of assets. But these firms are in the minority. AJ Bell, head of active portfolios Ryan Hughes, says up until recently there hasn't been any incentive for open-ended funds to switch up their approach and introduce a lower fee structure. I think it would be fairly clear that the reason they haven't gone down the tiered approach is because they've been able to charge a full fee on all the assets without question for the full period of time, says Hughes. Burton notes tiered pricing is already mainstream practice in the US, with over half of retail funds having tiered fees in place. The most common way to recognize scale benefits are applied is at the individual fund level. Only 10% of asset managers apply tiers to the AUM of the entire fund range, and an even smaller portion, 3.7%, apply tiers to the total AUM of the firm itself. In the UK, tiered fees have taken off in the investment trust universe. Baillie Gifford has rolled out tiered pricing across several of its largest trusts, including the £7.8 billion Scottish Mortgage, which charges investors an annual management fee of 0.30% per annum on the first £4 billion of net AUM and 0.25% par. There, for more on this story, visit the news article link.